Accounts payable might seem like a no-brainer job, but only to those who only have a superficial understanding of what it takes to get the bills paid and keep the organization running. The reality is very different. That's why today we're going to take a deep dive and look at what really goes on behind closed doors and why the accounts payable team needs to be on their toes 100% of the time. Reality number one. Invoices are frequently incorrect. That's right, the invoices that your suppliers send are not always accurate. Some of them are doing this on purpose, a few of them, and we'll talk about that later, and sometimes it's an honest mistake. That's why these invoices need to be verified, and best practice organizations use the three-way match on virtually everything. It's also why anyone who thinks that, well, you just get an invoice and you pay it is in for a rude awakening, especially given the burgeoning problem that we have exploding in many organizations about duplicate copies of the same invoice. And I'm going to talk about that a little further on, so I'm not going to go on to it in a great detail right now. Okay, so that's reality number one. Reality number two. There is a huge disconnect between what management believes automation can do for the accounts payable function and what happens in reality. There are several reasons for this, okay? And it's a really good issue, and it's one we don't talk about. So why does this happen? First of all, oftentimes management's total exposure, if you will, to accounts payable automation or invoice automation is the sales pitch that they hear from that very high-level sales executive who comes in to try and convince the organization to go with automation, or at a conference presentation is usually sponsored by the particular service provider and is, again, high level and glosses over some of the details. Rarely do they focus on things like training and getting training done for both your staff and your supplier's staff, and usage and actual usage of these automation solutions. And the usage, once you get deep in the trenches, if you will, is rarely anything close to 100%. It's usually something quite less. And even best practice organizations who really work at it never get to 100%. So their usage estimates are just not realistic. And then, of course, as we said in the reality number one, if you will, the invoices aren't always correct. So automating the solution is not going to help as much as it should. So there's this disconnect. Yes, automation helps. Let me be clear about that. But the emphasis here is on helps, okay? It doesn't do everything. Reality number three, and I've already kind of alluded to this, some of your suppliers will go out of their way to trick you into paying double. Now, as we've already discussed, many suppliers today will send duplicate copies of the same invoice. They want to make sure they get paid. It's cheap to send several people the same copy of the invoice when you're doing it by email. Some email and send paper invoices, and some of them do have good intentions, but some of them are absolutely trying to trick you into paying twice. There are some consultants out there who are now suggesting to companies that will improve their cash flow if they send a second copy of that invoice on the due date or maybe the day before the due date to remind you to pay the invoice. Well, you don't need a reminder. You got that original invoice, you've got it set up for payment, but sometimes these second copies, especially when they come in by email at the last minute, will trick companies into double paying them. And then there's the issue that some organizations, in fact many organizations, don't return the duplicate payment. Many will issue you a credit, but some will go out of their way to try and hide these credits. So if you ask, for example, for a supplier statement, yes, you'll get your supplier statement, but they'll have suppressed the printing of the credits on the invoice. So that's a whole nother issue. Okay, reality number four, and this one, I think nobody but me, but that's probably an exaggeration, but nobody is really talking about it, is that work in the accounts payable space is increasing despite all the press and the technology, etc., from automation. And let me explain why. Now, implementing and getting a full utilization of an automation solution doesn't happen overnight, and it doesn't happen without a lot of upfront effort. And that is more than you might imagine. It's not one of these things where you push the button, the automation solution and while it does reduce some of the workload, it will not completely offset the rest of what I'm going to discuss. So expect an increase in the beginning, especially as you're trying to hold the hands of some of your vendors, trying to get them to use it. And then don't forget some of the others. Okay. How your workload increases. Number 2, this involves duplicate invoices and weeding them out and weeding out fraudulent invoices. As you know, vendors have been sending 2 and 3 and 4 copies of an invoice, and those have to be weeded out so you don't pay twice. Now, you might say, yes, we're doing that, and yes, you are. But keep in mind that about 25% of all invoices are sent more than once. And this is quite a bit of work to weed them out and to make sure they don't get paid twice. Okay, but there's no place where we say, hey, you know what? We're getting all these extra invoices. Let's hire another person to work on it. It just doesn't seem to work that way. Now, you might be saying, well, what about the invoice number? Isn't that invoice number? Won't that help us? Because our software solution, our ERP, will not accept a duplicate invoice number. And yeah, that helps a little bit, but emphasis on a little bit. It did not turn out to be the silver bullet that many thought it would be. And by the way, I did also, okay? Because there are ways to get around that. And unfortunately, many of your staff knows it. So while the invoice number helps, it's not the silver bullet. So your people are spending more time. The next issue that is creating more work in accounts payable is the increase in regulatory compliance issues. And this is a huge one. And we're seeing it not only in the United States, but around the world. In the United States, we have now 1099 reporting requirements, not only at the federal level, but we're also seeing a number of the states have their own 1099 reporting requirements. So this is additional work. Every organization then needs to check the state websites and comply at the state level in addition to the federal level. And that is a massive increase. In much of Europe, Latin America, Asia Pacific, we now see organizations having, or countries actually having, mandatory electronic invoicing. And so there's the extra work as your staff starts, gearing up for that, making sure that you can comply and making sure that they can, meet the different guidelines in different countries. And if you're operating in more than one country, this is additional work, as each country has their own guidelines, and can be extra work in the U.S. if your organization is operating in some of these countries, if you're a multinational. Okay, I could go on for that for a long time, but I'll spare you and I won't. So the way that workloads are increasing in AP in the fourth way is that your AP staff now has to be alert for new frauds. It's not enough to just be alert for old frauds and be able to identify them and make sure that your organization doesn't fall for them. They also have to be alert for new frauds, because they are continually coming at us. And what we've seen in recent statistics, especially statistics from the Association of Financial Professionals, is that accounts payable is the primary target for a lot of these new frauds. In fact, I think the statistics showed that 61% of these new frauds were directed directly at accounts payable. So they have to be alert for these new frauds, and when they become aware of them, they have to devise tactics to make sure that the organization doesn't fall for it. They have to educate everybody. They have to share this information. So it's another hat, so to speak, that they wear, and it's not something that we think about when we think about reviewing work and workload. Fifth issue that we are all dealing with, and in some cases it's really big, and this is the massive, I cannot emphasize this enough, massive increase in new verification protocols that are now required. Now, we all know about, we have to verify those change of bank account requests that are emailed in, but that's just the beginning of it, okay? And that takes a lot of extra work. And I know most of the time when you call up to verify, the person says, yes, we did send that. It's a legitimate request. But the one time that it's not a legitimate request, it can mean a lot of money going out the door if you don't catch it. But they also have to verify a rush wire request coming from the CEO, the CFO, or somebody like that, and anything else that comes up that's out of the ordinary, that's not the ordinary way
way that you do work. So
And reality number 5, lots of change going on in the business world in general, but definitely in the accounts payable function. We've already, addressed some of this when we talked about, automation and technology, etc. But there's a lot of change going on. And this leads to questions about what's a best practice today, what's no longer a best practice, what should we be doing, especially as we move into the future, as we said, with all this new technology, AI, etc. We've compiled some of the more frequently asked questions about these changes into a short talk, which you should watch right now by clicking on the link on your that has appeared on your YouTube screen, if that's where you're watching it, and is in the description. Good luck.